What's up, everybody? It's a bit here. Welcome to this week's Global Capital Market Recap for the week ending August 27th, 2010. Just as a reminder, if you guys are not already signed up for the pre-market summary, be sure to get signed up for that. And the reason being is because most of the moves that are coming through, always in the S&P futures, stem from the overnight session in Asia and then in Europe. Those themes dominate what we see, the price action that we see during the cash session here in the States. So if you're not already signed up, make sure that you do that. It comes to you every single morning and will visually show you the relationships between different markets, currencies, commodities, and index futures, and also bonds too, treasuries. Because there's a very real correlation that takes place every single day between the broader markets, and there's a very real impact that they have on our cash market here and the futures market here. So make sure that you get signed up for that if you are not already. Today, the S&P closed at 1064, even on higher than average volume. We closed just 2% off the high of the session, which is a very, very strong move upward, especially given the volume that's taken place. We've seen over the past 3 or 4 days, if you guys have been paying attention to the blog, we've been calling huge amounts of attention to the fact that the institutional side has been getting long and big the past 3 or 4 days. And there's another video that I'll link to that talks about how it is that we know that the institutional side was getting long when they were, and how you can figure out when they are getting long so that you are also on the right side of the trade and not late to the party, because we were not late. We were definitely participating in the party in the chat the past week. We had a awesome trading session the past week, which has been great. As you can see, the line of support, or basically the magic number that the institutional side was defending, was 1037 even. That line, every single time price came anywhere near there, it was bid back up on enormously high volume. We are now over the previous, we had a line of resistance at like 58.5, which we were well over that. And we cleared yesterday's high as well, which is great. So this market's very, very strong as of this point. It took some time. It took about 3 or 4 days, for the institutional side to replace all of the supply coming through with their demand. So basically what happens is the reason why you see these high volume days is because all the banks and the hedge funds, things like that, once price is selling off, they're taking the opposite side of that trade. And the higher the volume that transacts, the more demand that's coming in to meet the supply. In this case, because they're already marked down. The opposite is true if they're already marked up. But the fact that it took 3 or 4 days goes to show you how much supply was in the market during the past week, and how much negative sentiment there was overall from dumb money, basically. And the reason why we know it's dumb money is because the smart money, we could see them buying. We could see the volume, we could see the price action. We knew that the banks were in, the hedge funds were in, taking long positions in the market, and they were not getting short. They were either covering shorts, which they probably were, but the bulk of the volume coming through was on the buy side, taking long positions in the market, which we know. And the reason why we know is because price is now appreciated from where we were. So last week we finished up the week as far as how there was demand coming back in, which we saw back in this area, and we did see that take place and going into the overnight session on Sunday, which we had a spike up to 1080, and then it just got smacked, and it got smacked down in the lower end of the range. And at that point, that's when we saw even more demand come in the entire week, bid price back up, and here we are. So I'll make sure to link to the other videos that talk about how to spot this when it takes place, because it's not hard, but for some reason, nobody does this. They rely on their indicators with the squiggly lines and stuff, and the whatever they want to do to try to get a jump, and they can't understand what's taking place, when it's taking place, or why. But we've done a good job of outlining how you can read what's going on from price and volume. You don't need any other indicators. You simply do not. I don't know if this is like a lost art as far as how to read your chart properly or how to read price action or what, but nobody seems to do this. Very few people do. The floor traders do this. The guys in the pit are able to do this, and I guess we are. I don't know what. I don't know. Anyway, I'll link to that for you guys. If we take a look at the weekly time frame, here's what it looks like on the week. We finished down on the week. However, it's important to note that we've had substantially higher volume, actually back to our 20-week average volume this week versus the prior, it looks like about 2 months or so, 1.5 months. essentially pushing us back up above this range that we established down at 1050. So we're right back into where we were. Now the thing that's going to be important for next week is if we can finish above where we are this week and get back into some type of positive move upward above where we are. A close above 1064 would be fine. That's a bullish case depending on what the bar looks like, depending on what the range looks like, and where the price settles out at the end of the week. However, given the price action of the bond coming through in the past week or so, very good chance that we're going to continue on higher for the next week at least. If in fact we don't, we'll be sure to notify you when we're seeing a reversal in price. However, it's important to note though that there is a substantial amount of demand coming back in, which is why our price closed up off the lows of this weekly bar. Alongside that, last week we talked about the eighths, quarters, thirds, and 1/2 on the actual index, and let me get rid of that for you. Here it is. And what that meant as far as where we were. Now we see a perfect line of support here at 1044 in the cash index. That held there for 4 days. Where the bar, the days either closed or they started right in that area, roughly. Now, I talked to you guys last week about how that anything that closes over this 50% line still means that there's a lot of power left in the market that makes a situation where it's definitely very possible for this to rip higher and continue on a bull move upward. However, now that we've walked our way down from these highs of 1219, we need to start doing some work and start making, having lines of support back in these areas and start climbing back up. We'll see that in the daily time frames. We'll see that in the weekly as well. But that's what's needed in order to keep us in some type of an upward trajectory. So today's price action was wonderful. The week's price action is wonderful to make a bullish case. However, it has to be sustained. So we'll see if that's the case or not coming up as we move along. Here's just a quick update as far as the broader markets for the week. As you can see, heating oil is up roughly 4% relative to everything else. Crude oil's caught a very nice bid as well. The yen is still up, even though it is down substantially from its 15-year high. In addition, the S&P, as I just noted earlier, as far as how we closed down on the week, we did close down. However, it's not bad. We've done quite a bit of repair work in the meantime to get back up to where we were. The NASDAQ was very, very weak today. Got sold off. Actually broke its low, which didn't really happen in the S&P. So that, quite a bit of repair work run back in the NASDAQ too. NASDAQ was getting hit all week long. It was leading the S&P downward, as you can see. Same thing with heating oil, or crude oil. Crude oil was getting hit very hard too in the beginning of the week. Then we started to see crude outpace. Once these themes start to take place as far as commodities and foreign exchange start to outpace the indices, that's when you know a reversal is coming very soon, in addition to your price and volume action that you see. Crude oil, take a look at where that closed today. Crude oil had a giant day. We talked about this last week too, as far as how there were buyers coming back in during this period, which there were. Was no demand, which is how we sold back off again, similar to the S&P index when we saw that. However, 3 days ago, right when we started beating the drum that the institutional side was coming back in long, that's when we started to see a huge pickup in volume, and you can see that very well in the 60-minute time frame too. I show the 60-minute time frame in today's midday broad market update, which you can go and look at. Nevertheless, we had a giant move upward. There's no reason to think that this is not going to be continued. There's a lot of institutional participation on the buy side right now, has been for the past 3-4 days. So that's where that is. We take a look at the euro-dollar currency. Euro-dollar currency has also caught a bid too in the past 3 or 4 days. Volume not as high, so it's important to note that that is not the case in the euro-dollar currency. We would like to see volume a little bit higher than where we were. However, 4 days ago and 3 days ago, we did see that high volume come in on the lows, and it made lows of 26. Our prior line of resistance was 29, which is not what took place this past week, but the week before. So we'd look for some resistance coming in at that point in time, potentially. Let's take a look at the yen. The yen, after hitting 15-year highs, started to get very bearish in there. Giant volume on that day, which means that someone's taking the opposite side of the trade. Otherwise, you're not going to see the institutional participation is definitely happening. Otherwise, you won't see that bar as high as what it is. Now we're seeing a sell-off, and hopefully the sell-off continues because we've got quite a bit of short interest in the yen itself. And real quick before we go, we'll take a look at the 30-year. Bonds and notes are making huge, huge moves upward, but it's all met by institutional resistance. Hope you guys have a great weekend. We'll see you later.